Hello, 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 hello. All right, everyone. Thank you so much for joining me for Funding Hacks. This is one of my favorite talks to give, and it kind of captures everything I've learned about raising capital over 20 years and distills it into roughly an hour. So hopefully you can get some nuggets out of this. I know a lot of you people, or I've had some interactions with a lot of you folks, but my name is Nathan. I run foundersuite.com. FounderSuite is a software platform for raising capital. It's investor database, CRM, data room, pitch deck hosting, investor updates, kind of a whole suite of tools for managing a fundraise. We've been around going on 6 years now, and our customers have raised over 3 billion. So been pretty successful. Before doing FounderSuite, I spent 10 years running a consulting business called Venture Archetypes, where I was helping companies raise capital. And before that, I did investment banking. So kind of my whole career has been helping companies raise capital. So this talk is really a distillation of all that experience. So let me tell you a very quick story of when of FounderSuite. I launched FounderSuite a few years ago, and this is me launching it on stage at SF New Tech. And you can see the UI is very different. It was very cartoonish. You know, it's kind of that phrase, I think Reid Hoffman or someone said, if you're not embarrassed by your first product, you waited too long to launch it. Anyway, the original version of FounderSuite, very cartoonish, but we launched it. We got out there, we got some traction, and I went out and tried to raise capital for it. And I got no one interested. No one was interested in funding FounderSuite. They said it's too niche. Startup space isn't a very good market. All kinds of reasons. I did not have a technical co-founder. So lots of reasons people turned me down. All right. So I went back to the drawing board, kept working on this. I actually was still consulting to companies, taking that money I'd earned, and then I'd hire some offshore developers to keep development happening on FounderSuite. And we just kept kind of plugging along. 6 months later, I tried again to go raise money, went out and talked to a bunch of investors, maybe like 40 this time, and still no love. And so I'm like, all right, well, I guess I just need to show more traction. So again, hunkered down, got more, a little more traction going, a little more development on the product. And I realized FounderSuite is my dream. This is what I've worked my whole life to do. I've wanted to be a startup founder my whole life. If I want to make this dream happen, I've got to raise money for it. And therefore, I'm going to leave no stone unturned. I'm going to give this one more shot to raise money, and I'm going to I'm going to contact everyone I know. I'm going to go through every LinkedIn connection I've ever met in my life. I'm literally going to give it the full college try. And if I still can't raise money, maybe that's a sign the universe is telling me I should not be doing this, but I'm going to lay it all out there. And, luckily, third time's a charm. I got FFVC, which is a New York venture firm, to come in as a lead investor. And I filled that out with about 10 angels, and we were off to the races. Yay, I raised capital. But it was really, really hard. And from that experience, I kind of took away a few things when I reflected back on that experience. One is fundraising truly is a numbers game. We're going to talk about that more. The first time I tried to raise money, I talked to maybe 20 people. The second time, maybe like 40 people. The third time, I talked to over 200 people. Number two, fundraising is a relationship game, right? It's a sales process, as we talk about number three, but it's also building relationships. You've got to nurture and build these relationships with investors. And then number three, it really is a sales process. You want to think about fundraising as building a funnel of potential investors and nurturing and working that funnel of investors, right? Building a large potential list of investors, screening, filtering, finding the right person to pitch, especially if you're going after venture firms, getting ideally a warm introduction to those investors. Those introductions lead to pitch meetings. You're crushing it in your pitch meetings. That gets you into due diligence and term sheet negotiation. And ultimately, you're selling shares of your company. So fundraising really is just a sales process. And one of the reasons I like to give this talk is there are a lot of ways to do fundraising wrong, but there are also ways to do it right. And it's something that can be learned pretty easily by basically anyone. So I like to kind of boil it all down to this magic formula. So the key to fundraising is building and nurturing relationships with highly targeted investors at scale. So let's pick this apart a little bit and actually show you how to do this. Let's start with the at scale part. As I mentioned, fundraising is a numbers game. Going back to my story again, I pitched in the third final and successful time. I pitched over 200 investors and ended up with 1 seed fund and 10 angels coming in. Now you can do that math. That's about a 5% conversion rate. That means I got rejected 95% of the time I was out there pitching investors. And that's actually pretty typical. Getting rejected 95% of the time is pretty typical for founders. We've seen this even in data on Founder Suite platform. So that means you need a really healthy top of the funnel. A lot of times I'll get founders come to me and they're frustrated because they haven't been able to raise money. I'm like, how many investors have you talked to? And like, well, we talked to 30. Like, you've barely scratched the surface. So keep that in mind. Keep those numbers in mind. Let's talk about how to actually build this funnel. So one way, of course, is starting with Founder Suite. I'm just going to show you a very quick thing of how to do that. So within Founder Suite, we've got roughly 208,000 investors. You can search by keyword or name. You can search by type of investor. I think we have about 140,000 individuals and then about 13,000 venture funds, about 8,000 private equity, so on and so forth. You can search by industry. And notice I've got a SaaS search open already. And then you can search by location. So I usually recommend coming in, searching by your industry. Let's say you're in SaaS, and then kind of just going through the list. And anyone who jumps out at you as potentially relevant, come over, look at their detailed view page, kind of take a quick skim at previous deals they've done. Make sure they're doing your stage, right? If these were a lot of like $40 million, $50 million deals, they might be a little bit later stage. And then come through and open up this investor's webpage. Go through their webpage, look at their portfolio, see if they have any competing investments, right? Go over and look at their team, kind of get a feel, scan their bios really quick and get a feel for like who's doing your type of deal. Anyone out here jump out at you that's doing your type of deal, right? So look at the team, open up their Twitter feed. We also have their Twitter feed down below, but you can click through to their Twitter, open up their LinkedIn page, just see what's going on with this business or with this investor, right? And if they look good, then go ahead and add them to your CRM, right? And so this is how you build a target list of investors. You start with the search, and then you go through and you're really just looking for signals or clues that they either do your type of deal, your industry, your stage, your geographic location, or they don't. If you know you looked at their previous deals and these are all very large deals and you're doing a seed deal, you know, probably go over and click not a fit, right? So that's kind of how to use the Founder Suite database to start to build that target list. All right, let's keep going here. Oh, by the way, we are very close to coming out with a new feature called Crowdsourced Data Insights, which I'm super excited about. So we will be tapping our users, our 2,500 startups, and trying to gather information or intel from you guys. If you just went out and met Social Starts and you pitched them and they told you some intel, we're going to try and capture that and then display it on that investors page. So I'd love your participation on that when it launches, probably in a week. All right, so another way to build this target list is using Crunchbase. You can do some searches on Crunchbase, but the way I like to use Crunchbase is I make a list of 10 or 12 companies that are similar to mine, but not directly competitive. And I plug each one by one into Crunchbase to see who funded them at the relevant stage I'm at, right? eShares is now Carta. They're a big company now, but they're kind of in the same space as mine. A little bit of overlap, but not really directly competitive. So I might, if I'm doing a seed round or Series A, I might, put Expansion Venture Capital, Draper Fisher, Elefund on my target list. Another way to use Crunchbase is if you have an investor, plug that investor into Crunchbase, and it will show you who they co-invest with. So that's a good signal there. Lots of other places to build this target list. Remember, we're aiming for 100 to 200, sometimes even more than that, top of the funnel. PE Hub, Inside Venture, and Venture Pulse are newsletters. You can subscribe to these. I read these every day with my coffee, spend 5-10 minutes. And basically, when a startup raises capital, they announce it in these newsletters so you can see who's getting funded and who's funding them. Also, when a venture fund raises a new fund or a new fund is formed, they tend to announce it in these newsletters. So, the best venture fund to be pitching is one that just raised a new fund. They've got a lot of fresh capital to put to work, dry powder to put to work. So that's always great. And these are free. So subscribe to them, kind of just read them, skim them. Conferences can actually be a good source of picking up investor leads. Conferences have kind of taken a hit last 2 years, but you can even go back pre-pandemic and look at conferences. If you're in Bitcoin or blockchain or cannabis or AI, whatever it is, go back and look at conferences in your industry, look at the speaker list. And a lot of times investors love to build their brand by getting out there and speaking at conferences. So you can pick up investors who are interested in your industry. Quora, TechCrunch, Medium, Twitter, you should be familiar with all these already. Quora is kind of interesting. People have put together lists of like the top 20 e-commerce angels or the top 10 investors in Southern California. I'm sure there's lists that people have built around that. Twitter is pretty interesting. VCs are really, really active on Twitter. So it's a great, as you start to build your target list, doing this research and Founder Suite, et cetera, follow some of these guys and gals on Twitter. Twitter will recommend other people to follow and really, kind of get in the mix with the dialogue a little bit. A lot of times you can pick up clues of what these investors are looking for in their deals and, just engage with them a little bit on Twitter. It's great. PitchBook, CB Insights are paid databases, very expensive. I want to say PitchBook starts around $20,000 a year. I'm not even sure how much CB Insights is, but it's very deep data. PitchBook will tell you like who is the lead investor on the deal, who is the attorney, valuation, all kinds of like pretty deep data. But again, they're very expensive. But if you know someone who has access, it's a good resource. AngelList, I put here as a question mark. You used to be able to go to AngelList and search for investors. I am not able to do that anymore. I'm not sure if I'm either blocked or if they changed it, but I have not been able to go to AngelList and search anymore. I think they've kind of taken that down. And now they're really focused on syndicates and being sort of a venture fund back office. If anyone has differing information, I'd love to hear it. And then last one here, mining your personal network. I'm going to show you a couple ways to tap your own personal network to build your pipeline. All right, so let me jump over to LinkedIn. All right, so this is just my LinkedIn. I do have a, oh, by the way, follow us on LinkedIn. We put a whole bunch of good crap on here. But this is my LinkedIn page. I do have a paid account, but you don't need a paid account for that. So I'm going to come in here and just do a generic search on something like angel investor. Okay, and now I've clicked the people button, and that's 128,000 results. So that's really too many to do anything with. That's too broad. So I want to come over and apply some filters. Now I might do a search on first degree connections just to remind myself who am I connected with? Who are the angel investors I'm already connected with? But really the hack here is to do second degree. And then let me just go somewhere a little different. Actually, you know what? Just for fun, I'm going to go San Diego because Kim's there. So then I might apply a geographic filter, and then, let's just search that. Okay, so much more manageable. So I've gone from 129,000 results, which is probably the whole universe of people in LinkedIn, to 424 results. That still doesn't mean that all 424 people are relevant to my business. So what I want to do next is command click or right click anyone who looks, potentially interesting. So I'll just do the first just do the first three or so. And I might even, when I actually do this in practice, I will open up maybe 20 or even 30 tabs at a time, right? And then I spend, 20 to 30 seconds going through each result pretty quickly. I'm skimming these and I'm looking for any clues, any signals that Christopher Mendoza either does my type of deal. I consider Founder Suite to be SaaS, FinTech, SMB. Those are kind of our industry tags, if you will. So I'm looking for any clues that this guy does our type of deal or does not do our type of deal. He's started two startups. That's great. He does seem to like FinTech. That's a good clue. And then, oftentimes people will list their investments on here. A lot of times you see that, or they'll say what they're looking for, right? Maybe he's started to focus on space investments, so maybe he's not so much into fintech anymore. But I might click through to anything I can, just to get a feel. I mean, he looks good enough that he might be interesting to add to my pipeline. Let's just go to Nirnith. Okay, so this is a clue right away. Digital health solutions. So, probably not a fit. Pet wellness. Okay, probably not a fit. Veterinarian. All right, so kind of right away, I'm going to just Command W and close him because it sounds like he's health and wellness. We're FinTech SMB. Let's just quickly look at Barry. All right. It's not always easy, but look, he's a member of Tech Coast Angels, so that's interesting. He's been angel investing for 3 years. So he's also health and wellness, possibly. I might try and click through and see if he's got an AngelList page to see what his portfolio is. Nothing really jumps out at me that he's a good fit for me. So just for the sake of time in this demo, I'm going to Command W, close him up. So let's go back to Christopher. So let's say I want to add Christopher to my pipeline, which I do, but I also want to do one more thing here. I want to click this link, 8 mutual connections. So if I've identified Christopher as a good target, now I want to go and find who is my best mutual connection that I want to ask for that intro. I know Mike, fairly well, good enough. So I'm going to add Christopher Mendoza to my pipeline, my CRM, and in the connector field, I'm going to put Mike Kren. That will remind me to ask Mike for the introduction when it's time for that. I might also list, 1 or 2 other people just while I'm here, so I have a backup in case Mike does not want to make the introduction. But you go through that. I could go through that whole, what was there, 424 results. I can go through that in half a day, even less, couple hours. I've gone through that. And really, I'm just looking at secondary connections that are interested in my type of business that I have a mutual connection with, added into my CRM. I did this and generated a lot of good leads when I was raising capital. Okay, so that's using LinkedIn to build your funnel. Remember, we're still just building the top of the funnel. We're building our target list here. Now I'm going to show you one thing I did in Founder Suite that's also useful for this. So this is just a demo account, and it's kind of messy, but the point I want to make, this is my investor pipeline within Founder Suite. The point I want to make is this column right here called Steve B Leads. Now, Steve Bennett is Steve B. Steve Bennett's a real person. He's a professor of finance at San Jose State. He's very well connected. He's like a fractional CFO at a bunch of startups, done a lot of angel investing. And he's actually one of my advisors. And so I came in here, I added a new column. I titled it Steve B Leads. And then over in settings, I invited Steve into my account and I said, hey, Steve, I'm building my investor pipeline. We're going to be raising capital. I've made you a column. Would you be so kind as to populate this column with some people from your network, from your Rolodex that you'd be willing to introduce me to? And he did. And he added like 10 or 12 names to his pipeline or his column. And I repeated this process with 5 or 6 other advisors and generated about 60 strong, warm intros by having a structured way of asking them to open up their network, right? I didn't just call up Steve and like, hey, Steve, do you know any investors I should talk to? I actually had a structured way for them to help me populate my pipeline from their network. And it's really, really effective just by having that structure. If you have a good relationship, you might also ask Steve to scan your research column. And if he knows Utsav Sumani, then he can just come down here and add his name to the connector field. So that might be the second ask. Hey, Steve, thank you so much for populating your pipeline. Would you just quickly skim my research column? These are folks I've kind of identified as potentially relevant. And if you know anyone, just open up their card and add your name to the connector list. Okay, so lots of places to build that target list of investors. As Yoda says, once you start this process, you'll start to kind of see and find investors all over the place. All right, I'm gonna take a quick drink. I've already showed you how to use LinkedIn. Now let's go back to our magic formula. We already talked about the scale part, right? We're looking for a couple hundred investors top of the funnel. Now we want to really focus on making sure the ones we're going to reach out to are highly targeted. I can't emphasize this enough. But once we've built this list of, say, 200 or so investors, now we want to actually start removing people off this list. We think about fundraising as a sales process. The best salespeople don't just chase every lead or every prospect. They really spend time qualifying their leads, filtering, prioritizing their leads. So they're spending their time really pursuing the most highly qualified prospects. And we want to do that with fundraising. So anyone who's invested in a competitor, just cross them off your list right away, delete. If they're ethical, they won't want to talk to you. If they're unethical, they'll send your pitch deck to your competitor. I've seen it happen many times. If you're going after venture funds and they have not raised a new fund in the last couple of years, they're probably only doing follow-on deals to their existing portfolio companies. That's kind of how the venture cycle works. They raise a $50 million fund, they put $25 million of it to work into a bunch of new deals, and then they save half of the fund to double down on their winners. So it doesn't mean you should totally not talk to them, maybe use them as a practice pitch, but it's easy to waste time pitching venture funds that don't have, fresh capital to put to work. Same with angel investors. If you're looking at Christopher Mendoza and you find him on AngelList or his LinkedIn, and all his deals are from 5 years ago, you might be taking a break. And that still, it doesn't mean you should not reach out to them. Doesn't mean you should not reach out to him, but the best investors to talk to are ones that are actively investing, right? Kind of obvious, obvious statement. Wrong sector, wrong stage, wrong geographic location. This should be pretty intuitive to you. If you are a medical devices startup, you would not be pitching fintech investors and vice versa. Stage sometimes trips people up. If you are a seed stage and you see an investor that calls himself growth capital, that sounds good to you, right? You want to grow. Growth capital means later stage, Series B on. So that might not be a good fit. Wrong geographic location. This is very interesting. Even as much as 5 years ago, investors were very, very focused on investing locally. The old joke was, investors on Sand Hill Road in Silicon Valley wanted to invest within a bicycle ride away from their offices, then a Tesla charge away from their offices. But even before the pandemic, this has really started to change with like international startup successes like Skype and others, Spotify and others, right? And investors are much, much more open to investing anywhere. And I know how diverse this group is on the call looking at the locations. So that's good. And then pandemic has really kicked that into high gear. And I think especially while we're still on kind of lockdown, investors are really open to taking pitch calls over Zoom. So it's become a great time to raise capital no matter where you're at. This is really special because 5-10 years ago, it didn't happen like that. You had to be in Silicon Valley to raise money from Sand Hill Road investors. That's changed, at least temporarily, but I think it will persist. So, good for you. It's a good positive point. And then bad reputation. This is a little bit of an intangible, but you're going to spend the next 6 to 8 years of your life with these investors. They can make your life hell. I know a couple founders I've worked with when I was consulting that, put years of their life, put all their life savings into a startup, went out and raised a seed round and then a Series A round. And by the Series A round, they had lost control of the board. They no longer had, majority ownership or board control. And maybe the startup didn't grow as fast as everyone wanted it to. And founders got fired, right? It happens. And it's brutal when it happens. And sometimes that's good stewardship from the VCs. Sometimes there are just investors that are bad. And so, definitely do the due diligence on the investors. If you're in an accelerator, put the word out. Hey, is this person reputable? One of the things we're going to be doing in this crowdsourced data product that we're coming out with like a week from now is trying to gather reviews and tips on investors. So, I'd love you to contribute. If you just had a pitch meeting and this investor was great, or maybe you raised capital from an investor and they're awesome, put that in our data so other founders know this is a good investor and vice versa. Okay. So bottom line here, we started with a list of maybe 200 investors. Now we want to kind of filter it down to maybe 150. General rule of thumb, cross off about 30% of that initial list. So what remains is a highly focused, highly targeted list of investors. Investors can smell a mile away if you did not do the research. If you're reaching out to an investor and you did not do the research, they know that instantly. So really make sure you've got a highly focused list. And one of the things I'm going to talk about a couple of times is fundraising is about getting momentum going for your deal. If you don't remember anything else from this talk, it's fundraising is driven by momentum. And it's very hard to get momentum going for your deal if you're chasing poorly qualified targets. So don't skip this step, please. All right, step number 3. Now we want to figure out our best intro path to each investor. We did a little of this when we were doing the research on LinkedIn, but all of the other people, maybe you just found them in Crunchbase or FounderSuite, click through to their LinkedIn profile, see if you have any mutual connections to that investor, identify your best mutual connection, add that person as the connector who you're going to ask for the intro later. Biggest question I get is, what if you don't have any mutual connections to an investor? Not to worry. The hack here is to research and then reach out to 2 or 3 startup founders that Tim invested in over the last, say, 6 to 12 months. Cold email to these founders. Hey, I've been following Tim for a long time. I see you invested in your startup. Congratulations. I'd love to hop on a quick Zoom with you and hear what it's like working with Tim. Is he helpful? Is he active? Is he more passive? If you could, I'd love to just chat with your brain and pick your brain about Tim a little bit. Most founders are pretty good about helping other founders. And once you get a little dialogue going with that founder, it's okay to ask for that intro to Tim. The reason this little hack works so well is Tim spent, 3 or 4 months getting to know that founder, obviously put money into him. There's a level of trust there between founder and Tim. And that founder was doing exactly what you're doing 6 months ago, hustling for intros. So there's a great pay it forward, pay it back kind of ethos amongst founders. So unless you're a total ass, many founders are probably going to be willing to help you out. So this is the great hack. Now, if you don't want to go through the time and effort of hustling your way into a warm intro, there's always the cold email. Tim's email, I believe, is just tim@DFJ. Very easy to find people's emails these days. The problem with the cold email is that Tim is already getting 50 to 100 warm intros a day. Probably even more for Tim, but many VCs are filtering as an initial kind of screen. They're filtering, how did this startup reach me? And they're using, a lot of VCs won't even look at cold emails. So the other little data point I like to point out is I was on a webinar with Jeff Clavier of Uncork Capital. I think that's what it's called. Very active seed stage fund. And a question came up, have you ever invested in a startup that came in over cold email? And Jeff said, yes, we have. We've invested in 2 deals, came in over cold email out of 760 portfolio companies. So yes, it is possible to raise money doing the cold email outreach. And I'm going to show you a little tactic a little bit later of how to do it right. But your odds are significantly lower. 2 out of 763 Uncorked startups came in through cold email, the rest through intro. So it's much, much harder. So spend the time trying to get that warm intro if you can. Okay, so we need to get organized now. I used to build these elaborate spreadsheets for startups. I think most of the people on this call are already Founder Suite users, so I won't do too much of a sales pitch. But the reason we built Founder Suite is kind of a better way to manage an investor pipeline. And see if I have one open here. So I kind of already showed you how to do this, but the general concept here is just organizing a pipeline and really staying on top of all the activities that happen when fundraising. One of the things I do like to do is like connect my email to the account. Bear with me. I should have had this prepared. Apologies. Let me just show you one real quick. Right here. Sorry, guys, I should have had this loaded. But I like to kind of use this as a demo account. Really what you're doing is you're setting up stages of fundraising steps, right? Sent deck, viewed deck, responded, pitch, diligence, and you're moving these cards through the stages of your pipeline. As you're making progress with them, you're moving them through your pipeline. It's pretty much as basic as that. This little gray bar will tell you how many days since your last activity. So in a perfect world, you're keeping all the little gray bars completely full. That means nothing's slipping behind. In this one, I've added a couple of custom columns like viewed deck, responded. And the reason I do that, because then later on using the send email tool, I can send an email to all those investors that I sent the deck, but they did not yet view it or did not respond. Or I can send a separate email to all these investors who viewed my deck, but had not responded, so on and so forth. So that's, come in here, think about how you want to structure your workflow and then do the columns around that. And then just one other little thing I'll show you real quick that I like to do. Obviously adding the amount committed or potential commitments. I like to come in and set a priority on these investors. Are they high, medium, low? Then back on that main screen, I can filter or sort by that. If I just want to see my high priority targets and work on them for an afternoon, let's do that. And then does that investor lead or co-invest? A lot of times, the hunt is to get a lead investor. Once you've got a lead investor, you might want to look at all the others that co-invest and reach out to them. So just a couple things to do there. This is where you're adding notes. This is where you're adding tasks, right? Maybe you've got to send them a customer reference, give it a date, give it a time, push it out to your calendar of choice so it gets logged on as an alert. Adding any files, what's the pitch deck or term sheet you sent these guys, just add it here so you keep a reminder. And then my favorite is the email connectivity. So this is really cool. You can connect your email, which allows you to send out emails, send out pitch decks, stuff like that. But it also will pull in the email conversations you're having with investors. And if you are working with a co-founder in the account, or maybe an advisor, an investment banker, or whatever, you can set it so you can pull in everyone's conversations. So you can see all the conversations your co-founders having with each investor. And a lot of people find that really powerful. So anyway, that's the CRM. Check it out. If you're not already using it, hopefully it'll be helpful. And then just 2 other tabs that are useful. Here's the activity. What's happening in the account? Who's doing what? How many new investor leads did you add last week, last month? How many new committed investors? And then your kind of master to-do list. So there's the CRM. Hopefully it is useful to many folks. But back to what I said a few minutes ago, fundraising is driven by momentum. And not only is it hard to get momentum going if you're pitching poorly qualified targets, It's also very hard to get momentum going if you're running a sloppy fundraise. So you really want to have a good system of keeping track of all the actions, the discussions, the follow-up activities that happen when you're fundraising. If you're talking to 200 investors, every investor interaction usually leads to 2 or 3 follow-up activities. So we're literally talking 1,000 actions and tasks that have to happen when you're raising money. So you need a system to stay on top of all this. So hopefully fundraising is the solution for you. Founder Suite's the solution for you. Okay, I'm going to speed it up a little bit. I know we're kind of going late. Before you get out there pitching investors, make sure your pitch deck is unbelievably good. You're blowing the doors off everyone who listens to it. Make sure you've given your pitch at least 5 to 10 times to people who would give you honest feedback about your pitch. Probably the top number one reason I see startups fail at fundraising is their pitch is terrible. It's confusing. It's too cluttered. It doesn't show like elegance of thought or the ability to like crystallize a vision, right? Well, lots of reasons. So just make sure you've given your pitch to other founders, your attorney, advisors, anyone who will listen and give you honest feedback. We do a little pitch deck review for our gold member customers, just a quick 30-minute one, free, which is kind of fun. And founders usually find it pretty valuable. So take advantage of that. But don't get out there with a bad pitch. You don't get to go back a month later and do a do-over with investors. You got to go out the door with an awesome pitch. Also, I showed you how to like set your priority on investors like high, medium, low. You might start your outreach to your low priority investors. So you get a bunch of pitch reps in with them before getting to your number one investors, right? Don't start with your top investors. Get some pitch practice in with kind of the lower tier ones. Also, it's really great if you have a financial model, just showing what your business looks like over time, how you're going to spend the money, and what your business model looks like. And then I like to have an executive summary as well. Okay, so we're about to start the conversation. When you're doing the research of how you're connected to investors, you might find that you have a power connector or two in your arsenal. Jeff is a real person. He works at NASDAQ, so he's really well connected. And when I was looking up all these investors, I kept seeing Jeff's name here as a mutual connection. So I put together an email to Jeff. Hey, Jeff, I'm raising capital. I see you're connected to these people. Do you know them well enough to make an introduction? And Jeff can just skim this list and respond. I know Jessica, I know Sean, I know Wesley, I don't know Kyle, Noah's not doing any new deals, so on and so forth. He can just go, yes, no, yes, no, yes, no. For everyone he says, yes, I'm happy to make an intro. I put together a clean new email thread. This is the intro request email. And one thing I'll point out right away, notice how short this is. Another mistake I see founders make a lot is their intro email will have a 45 megabyte PowerPoint attached full of animation. Their intro email will have like 6 dense blocks of text describing the entire history of the business. No one cares. Your intro email should be a teaser. Think of it like a teaser where you're just piquing their interest enough, to get them to jump on a Zoom or take a meeting. So let's point out a few things here. Subject line, Jeff, can you introduce me to target investor? And then here's what we're doing, raising a seed round. We had FFVC leading it. We had 65% of the round already committed. We didn't start like that, of course, but whatever is the single most exciting, sexy part about your business, put that up in the subject line. You're trying to pique their interest, right? First line in the body of the email. Good chatting with you. As mentioned, I'm raising a seed round. Here's what we do. We make an investor management reporting platform. Here's a link to our site. A lot of people forget to include a link to their site. And then the ask, could you intro me to target investor? And then kind of the why. He's got a good track record in my space. And then I noticed this guy on LinkedIn went to the same very small college in Iowa that my dad went to. So I put that in there, um, just to personalize this a little bit, right? To make it feel, more customized around him. And then I include a link to our deck. And this deck is hosted on Pitch Deck, of course, on Founder Suite, of course. We have a Pitch Deck hosting product. So I put it up there. This is not the full deck. This is a teaser deck. Think teaser email, teaser deck. This is basically 5 slides. It's problem, solution, market, traction, team, right? Problem, solution, market, traction, team. And that's enough for this investor, Clint, to get a feel for what we do, size of our market, where we're at with our traction, and who's behind this, our team. And I really like to send this teaser deck along for a couple of reasons. One, if Clint clicks through this and says, this is not a good fit for me, it's too early, I'd rather have him kind of opt out up front rather than wasting my time setting up a meeting, so on and so forth. Number two, if he does want to take a meeting, then I can go into our analytics in Founder Suite and see, oh, he looked at our deck for 10 minutes, or he looked at our deck for 1 minute, whatever. I can kind of get a feel for how much time did he actually look at our slides. And then when I hop on the Zoom with him, I know, he's got some familiarity with Founder Suite already because he spent some time on our deck, or he didn't, and I really need to start from scratch. So, anyway, just a nice, short, simple teaser email with a teaser deck. And then Jeff, my connector, can just forward this along to Clint. Hey, Clint, Nate's a buddy of mine. Do you want to take this intro? Boom. Hey, Jessica, Nathan's my friend. Do you want to take this intro? Boom. You can make this, all these intros really, really quick. All right. So now it's, true showtime here. This reference is getting a little bit dated, but I'm still going to keep it in here because it's so good. If you have not watched HBO Silicon Valley season 1, go back and watch it. It is absolutely genius. It's about a fictional startup called Pied Piper. Richard in the center here is the CEO. He's an engineer. He's an introvert. He just wants to be writing compression algorithms, but he's got to get out there and meet all these investors. All these investors are very, very smart. 40% of VCs went to Stanford or Harvard. That's a true statistic. Many have very large egos, the guy in the upper right corner. Investing is what they do every day of their lives, whereas for Richard, this is his first time. So it can be very stressful and challenging, but you've got to, as I like to say, channel your inner hustler, hustle like you've never hustled before, and, kind of make it a game a little bit. You're going to get a lot of rejection, but you're also going to learn a lot. So think of it as a positive kind of learning experience, and channel your inner hustler like Richard does. So let's talk about a couple hustle tips here. Number one is doing the intros in parallel, meaning asking your connectors for those introductions all around the same time frame. I call this the Blitzkrieg approach. And once again, our goal is to get momentum going for your deal. Investors can smell momentum. They can also smell when a deal has gone stale, or does not have momentum, and so your number one job as CEO is to get momentum going for your deal. Every time you have a pitch meeting, investors will ask you something like, nice to meet you. I'd love to hear how the round's coming together. That's their little way of probing. Does this deal has momentum or not? And you want to be able to answer that with something like, yeah, thanks for asking. We just started fundraising last week. I've got 10 meetings this week. I've got 12 set up next week. I'm aiming to close this round by March 1st. We're running a pretty tight process, pretty tight timeline using Founder Suite, of course. And I'm pretty confident we can get this done by March 1st. That's signaling to them that other people have interest, right? That you're professional, you're running a process, you're using the right tools like Founder Suite to do it, and you have a timeline. And so if they're interested in your deal, they've got to kind of march to march to your timeline, because investors' natural inclination is to watch and wait. They will watch and wait a deal unless you can tap into that FOMO and that momentum. So obviously, as you make progress with your deal, you replace, oh, we've got 10 meetings this week. Then you start to replace it with, we're in diligence with four investors. I'm expecting 2 term sheets by the end of the week. Whatever those signals are, you want to convey that without exaggerating, without lying, and so on and so forth. So if you don't remember anything else from this talk, just remember my job as CEO is to get momentum going for my deal. And that's what drives deals. Under the pitch category here, you should be improving your pitch constantly, right? When I raised money, I think I was on version number 52 of our pitch deck by the time, the checks had cleared. I would go out, pitch a couple investors, come back, put my kids to bed, crack a beer, work on my deck for an hour every night. So it just gets better and better. And these two things are complementary, right? You're getting momentum going for your deal and your pitch is getting better and better. These two things kind of feed off each other. Leveraging VCs off each other. This is really important. You don't want to lie. You don't want to exaggerate how much interest you have from other investors, but you want to signal that others are in play here and interested. And then maybe my favorite tactic of all, and Rustam, you are already doing this, good for you, is to send a regular investor update to investors in your pipeline. So I'm going to jump to another quick demo here. This is our investor update tool. So the hack here, every investor in your pipeline who has not told you, no, go away, don't ever bug me again, should be getting a regular company update from you. And it doesn't have to be long or elaborate. Here, I'm going to zoom in just a little bit. This, of course, would be your logo, your photo, but this is a great, example of an update to prospective investors. Little overview about what you're doing. Just remind them what you do, right? They're talking to hundreds of startups a week. So just remind them what you're doing, maybe a little traction point to pique their interest. Next section, what happened last month? What progress did you make last month along product, marketing, sales, whatever it is? What did you do? What did you achieve last month? Any metrics you have to put in here? Put in an image of your product, right? Whether you're software, whether you're robotics, doesn't matter. Put in an image of your product just to, people are visual, humans are visual creatures. Put in a picture of your product. Next up, talk about what you're going to do next month, right? Tease up what you're planning to do. And then last but not least, put in a team shot. Every single update should have a team shot of who you are. So let's zoom out on this again. And that's it. That's basically all this is. What you're doing here is you're saying what you're doing, the progress you're making, traction's increasing. Hopefully your metrics are improving. You're showing what you're doing. You're talking about what you're going to do next. And if you send this update out a couple months in a row, you're telling what you're going to do. And then in the next month's update, you're going to talk about your progress. You're going to talk about what you did, right? And this can create a really good virtuous cycle. If you're saying we've got 8 partners in our pipeline, in our pipeline, you're talking about that over here and the looking ahead. And then the next month, you're like, we closed all 8 of those partners and we added 2 more. So we really beat our expectations. You're telling investors you can plan ahead, you can execute, and you can report back on your progress. Those are 3 attributes that are really sexy to investors. So this is just a great way to kind of nurture those relationships over time. And huge bonus points. This is maybe my favorite hack of all. So listen for a moment if you've been checking Facebook. If you can start this process even 6 months or so before, it's great to do it when you're in the middle of fundraising, but if you can start this process even 6 months before you plan to raise capital, Let's say you're planning to raise capital in June. Start, build your target list, reach out to investors now saying, hey, I've identified you. We're not raising money right now, but you're right in our sweet spot. I send out a company update, a one-page monthly update. Can I add you to my distribution list so you get a sneak peek, an early peek at what we're doing? Most investors, because it's their job to identify startups before other people do, most investors will say yes. You add them to your distribution list and you start to send this out months in advance. Send it January, February, March, April, and then in the May update, so they've already received like 5 updates from you. In the May update, you say, up top, we're going to be kicking off our Series A round in June. Let me know, contact me now if you'd like to get early access to our pitch materials. So you've nurtured these relationships for, say, 5 months, and you're teasing that you're going to start kicking off the round. If they like the progress they've been watching for 5 months, I've seen this happen many times where investors will come in, swoop up a deal before it even goes out on the market. It's kind of like real estate here in Marin. Houses are sold before they even go on the market because of this sort of nurturing relationship thing. So it's my favorite hack. I've seen it really work well. And that way you don't even have to run a process if you have investors that you've nurtured and they kind of come in and take the deal before even having to go out and shop it around. Okay, we're getting close to the end here. I know this is run a little long. Just be prepared for basically treating fundraising as a full-time job. It's very stressful. You're not alone. Everyone goes through the stress of this. I thought I was getting an ulcer. It's just the way it is. So just to recap, key to fundraising is building and nurturing relationships. The investor upgrade is a great way to nurture those relationships. I'm going to go through this very quickly, but why does this matter? Why do you want to nurture these relationships? Because investors invest in lines, not dots. So think of every interaction with an investor, whether that's be a meeting, a call, or an investor update, as kind of another dot creating a line. Okay, I'm going to speed through some of this stuff. We did a little bit of retargeting ads to investors when we raised our round. One of my angel investors who wrote me a check for $70,000 said that every time he logged into Facebook, he saw Founder Suite ad, not an ad for the fundraise, but just an ad for us. And so I think it helps kind of stay top of mind. I like to use, of course, Founder Suite's pitch deck hosting tool to see who looked at my deck. Some people say use Facebook to find those mutual connections. And then just very quickly, I'm actually going to skip the rest of that. Also going to skip this. This basically refers to angel or seed rounds. If you don't have a lead investor, the tactic here is to collect a lot of conditional commitments from all these angels you're talking to, 25, 50K conditional commitments until you're about 30% oversubscribed. Let's say you're raising $1 million. Collect 1.3 in conditional commitments, then go back to everyone and say, hey, we're actually oversubscribed. Here are the terms. Let me know if you're in. And you can kind of build a party round like that without a lead investor. All right, almost done here, and then we'll get to Q&A. Every time you meet with an investor, ask basically for their interest. And I'll give you an example of what to say. Hey, thanks so much for taking the time today. I really enjoyed our pitch call here. I would love to hear your interest level. I would love to hear what your typical check size is. And I'd love to hear what the next steps are. And then just stop talking and let the investor respond to that. A lot of times you'll get a response like, oh, we'll talk it over at our next partners meeting and get back to you. But if there's a next step included in that response, that's a really good buying signal. Number 2 here, actually make them pitch you a little bit. So again, at the sort of end of the pitch meeting, say something like, I really enjoyed kind of sharing the vision I have for Founder Suite and where we're going with this. I would love to hear how you help your portfolio companies and how you see, yourself helping me build Founder Suite. And then again, just stop talking and let them actually pitch you on why you should let them into your deal. The reason this works is every investor who's been investing for more than a month has lost out on a competitive deal. And so you're signaling to them that they might have to actually hustle to get into your round, right? And especially as you get momentum going for your round, they can really smell that, remember? And so now you're signaling that they might have to hustle to get into your deal, and it just kind of creates this like piranha feeding frenzy. It can take, a couple meetings before you get a term sheet. That's normal. General rule of thumb here is it takes 80% of your time and effort to get that first term sheet. And then once you get that first term sheet or committed lead investor, 20% to fill out the rest of the round, right? So just think of it like that. Number 4 here, it can actually be very hard to get a no. A lot of investors will ghost you. I'm going to show you something I actually did here. It's kind of funny. So in my pipeline, I've got my committed column, my no column, and then I added 2 other columns. I've got a no response. These are for people who ghost me. And then I've got a column called revisit for Series A. These are people who say, not right now, you're too early, which is still a no, but it's like a no, not right now. So anyway, you're going to get a lot of ghosting. That's just how it goes. When someone does say yes, we use Paul Graham of Y Combinator's handshake deal protocol. This basically means, let's say you're met for coffee or you're on a Zoom and someone says, I like it, put me down for 50K. Then after the call or meeting, just go back to your email and say, so great to meet you. Just to confirm you're in for 50K, please write back confirming that. And if they do that, you can pretty safely move them into your committed column. If they don't do that, they're still just a prospect and kind of should be treated as such. And then last but not least, don't let up until the money is actually in your bank account, until the check's clear. Bad, corny joke. How do you know when an investor says yes? When their check clears, right? Everything before that, a term sheet is not a yes. A yes is not a yes. When their check clears, when their wires cross into your bank account, that's a yes. I've seen deals fall apart the 11th hour, even though it seemed rock solid and term sheets and all this stuff, because investor gets cold feet. So keep your foot on the gas pedal, drive it over the finish line until the money's literally in your bank account. And then let's just put this all in perspective. You just raised $1 million. I would love to hear about it, especially if you use Founder Suite. That's super exciting for me to hear of our customers' success. But put it in perspective. That buys you maybe 12 months runway. That means you need to start thinking about fundraising 6 months from now. And really, even the day after you close a round, you should start to build a target list for the next round. You should start to nurture those relationships using investor updates. And you could, start to warm up your next round, right? And there's a higher level of expectations for the next round, right? So you got to kind of start this process early. So even though we do get people coming on the platform and coming up, you kind of have to be fundraising all the time. Sorry to break it to you, but that's how it goes. All right, just a few quick plugs here. Obviously, check out Founder Suite. We have some deals if you're a new customer. We've got a couple discount codes for you. Got a great blog.foundersuite.com. Lots of really good insights there. And then maybe my favorite thing is our How I Raised It podcast. Check it out. We've got 200 and how many do we have now? 223 or so episodes, interviews with founders on how they raise capital. And, I thought I knew it all. I thought I knew everything about fundraising until I started to do this podcast. And I learned there are 223 different ways to raise capital. So check that out on Spotify and iTunes. Also on YouTube, we put up the same content on YouTube and a lot of really good stuff on there. Just how to do stuff, right? Really deep. I showed you these investor update stuff, but some examples here. I'll send these slides around. And then, if you don't mind, give us a quick follow on Twitter and reach out with questions. Now, let's open up the Q&A